Hi, welcome back to Business Lunch. Still holding up with gains of about 0.6% for the index. Apart from the IT majors that are holding the markets up, Reliance is now up almost 2.5%. Volumes are picking up there. In that space itself, GAIL is also moving higher. So there you have it, GAIL and Reliance from oil and gas, and a couple of others like IndusInd Bank, Yes Bank from the financials also doing pretty well today. But it is the last few days of 2018, so let's recap the year gone by through the sectors that impacted the markets and the economy. Here is Nigel with a look back at the steel sector. Nigel, over to you.
Well, 2018, yes, it was a fairy tale year really for the ferrous space. It started off so well. For majority of the year, it was doing so well. But towards the tail end, it appears there's some consciousness that it's coming in there. Remember, there was sparkle all through the year. It's likely to end, though, on a somber note. The domestic steel consumption story has been growing at around 3 to around 4% in the last few years. But year-to-date, that story, in fact, has picked up because the year-to-date growth is nearly around 8% approximately, clocking nearly around 63 million tons or thereabouts. Strong domestic demand, some consolidation in the industry, as well as cutting down of capacity in China. That's something that's really helped the global steel business look very strong. Now, in the past year, there was a sale of sorts that was up for grabs for all the ferrous players. 20 million tons were on the block. You had nearly 3 out of those 5 that got resolved. We're still waiting by to know who's the new owner of Essar Steel as well as Bhushan Power and Steel. So let's talk about the deals that are closed out. Tata Steel went ahead and they acquired Bhushan Steel, 5.5 million tons for around 35,000 crores. Not very cheap, but it was of strategic importance if you're looking at it. Because some part of the street said, well, the leverage on the books is going to go up, but others believe that they can move from 5.5 million tons to 8 million tons, increase the EBITDA per ton of this acquired asset, and on the whole, they can use some part of their iron ore from their captive sources for this plant as well. So that was about the first deal. The second deal was that we know Vedanta is a big player in the non-ferrous space. Now this year they made their entry into the ferrous space. They started off with a 1.5 million ton plant. They've acquired it for nearly around 5,000 crores, but there is a scope to move up to around 2.5 million tons. That was already known. Now in the last few days, the management is talking about scaling that capacity to more than 5 million tons. That was the second deal. Finally, JSW Steel, everyone thought they're going to get bulk of that 20 million tons odd. Well, for the time being, they're satisfied with only around 1.5 million of Monnet Ispat. That has been acquired for around 2,500 crores, and that's in a consortium with Aeon Capital as well. For them, it gives them an entry into a new geography because till now, they were primarily in the South India. Towards the end of the year, though, a couple of problems crept up. One was that, in fact, the exports, they started coming in much lower. So year-to-date, they're down by more than 35%. And the imports, they haven't seen a decrease. So where does, a domestic player then export the steel? That's a bit of a problem. That's point number one. The second point is in terms of prices. Chinese steel prices are corrected by nearly around 15% in the last 2 to around 3 months. Domestic prices, though, are down by only 4 to 5%. Now, the problem is that importing steel, including all the duties, is a little cheaper than the domestic prices. So the street is bracing for a correction of roughly around 3 to 4 or maybe 5% in the month of January. We'll have to see how exactly that plays out. So there is some cautiousness that's creeping in there. And in addition to that, your steel prices are falling, but iron ore and coking coal, which is the key raw materials, that hasn't really fallen. A couple of brokerages are fairly cautious. You had Macquarie. They, in fact, believe that it's not going to be such a very merry Christmas for the ferrous industry. They're expecting a downtick of $30 to $40 per ton on the EBITDA per ton going ahead. And even Morgan Stanley in November 2018, they, in fact, sounded quite cautious. They said risk-reward is not really favorable at these levels, given that steel profitability was at a near-decade high.
Right, Nigel, thanks a lot for that. In fact, you spoke about a lot of the global steel prices and global factors. So let's take it straight then to the global markets. Actually, last evening, or rather last night, we saw a big move come by on the Dow Jones, nearly 1,100 points, the biggest that we've seen ever in terms of points. And that percolated down to the Indian markets as well. The Nikkei ended higher by about 3.5–4%, but it was pretty wobbly for the other Asian indices. Hang Seng, for instance, was down about 400 points from the top, ended about 200 points lower, as was the Shanghai index after the green turned into the red. However, the European markets, which opened after about 2 trading sessions, after the volatility on the Wall Street, the futures indicate that there could be a gain of about 1.5% for all the 3 major European indices. So no problems as far as the global markets are concerned in yesterday's trading session as well as today. But as stocks rebound from the worst hit Christmas bottom ever, CNBC's Bob Pisani reports on what were the turning points for the markets along with the highs and lows for 2018.
It was a roller coaster year with several 10% swings in the market. Here's the 6 most important stories of 2018. Number 6, the tax cuts and the market boost. Earnings grew 24% in 2018, half of it due to the tax cuts. It's the best growth since 2010, but the markets sniffed out global slowing late in the year. Stocks have come down more than 10% in the fourth quarter. Number 5, it's the return of cash. Suddenly you could get a 2% on a bank certificate of deposit. For the first time since 2008, cash in short-term treasuries outperformed a 60-40 stock bond portfolio. Cash is up 2% this year. The stock bond portfolio is down about 2%. Number 4, the Bitcoin bust. Bitcoin topped out near $20,000 in December of last year, and it's closing out the year near $3,400. What did it in is a combination of endless reports of thefts and break-ins combined with an SEC that has adamantly refused to approve a Bitcoin ETF. Number 3, the interest rate spike that never happened. Short-term interest rates rose for most of the year, but longer-term rates did not. 10-year Treasury yields are about where they were in February. Those betting that rates would rise across the board were surprised when inflation remained relatively subdued and concerns about a slowing economy kept long-term rates down. Number 2, China trade and tariffs. Everyone agrees the U.S. should stand up to China on intellectual property theft, but the markets are saying it does not like using tariffs as a way to force a change in behavior from China. And the number 1 story for 2018, my opinion, the return of volatility. In 2017, the S&P closed up or down 1% or more only 8 times. In 2018, the S&P closed down or up 1% on 57 occasions. 26 of those were down, 31 were up.
Okay, well, I hope there's not as much volatility in 2019. I don't think traders can take that, right?
Absolutely. But meanwhile, there is volatility in individual stocks. Sale and exploration. Board approves a buyback for 25 crore rupees, maximum 300 rupees, and the stock price is 187, so the stock is up about 8%. So on that note, I think we can wrap up on this edition of Business Lunch. You stay tuned to CNBC TV 18. Midcap Radar comes up next.